Hello everyone, I'm Vishwa. Nifty was continuously moving higher for the past 5 weeks. But during the last week of September, it broke this record and started to fall. When you look at this weekly chart of Nifty, we can see this interesting uptrend. Right from April all the way up to last week, Nifty was completely bullish. We saw some selling pressure along the way, but none of it was very strong. Last week, however, we saw nearly a 2% drop in value, and this amount of selling did not happen anywhere in the last 5 months. So this might indicate that more and more people are starting to think that the market is becoming overvalued and are waiting for a reasonable pullback. Now, coming to the macro events. The rise in crude oil prices and yield of the US bonds and concerns over China's economy had a negative impact on the market sentiment last week. Banking and financial sectors, FMCG sector, capital goods sector, technology sector were some of the sectors that performed poorly last week. And sectors like oil and gas, power, metals, and auto saw a buying interest. So last week was the first time in 5 months that saw a major drop. However, the uptrend is still intact in Nifty. And for the coming week, we can expect the market to take cues from global data, such as oil prices, US job market, China's power outage problem, and US bond yields. And most importantly, the market would react to the RBI's monetary policy. So, these are the data that would drive the market mostly for the coming week. And as for the monetary policy, RBI is expected to keep the repo rates unchanged to help economy recover. So, this might add some good news to the market. However, oil prices are expected to continue higher as OPEC might not agree to increase the supply to meet the rising crude oil demand. And this would have a negative impact on the market. And as for the Indian rupee is concerned, the rise in oil prices possess a big problem to INR, as rising oil prices would depreciate the value of INR, and from the current situation, it is expected that the INR might depreciate further to 75.50 or 76 by December against US dollar. During last week, FII sold shares worth of 6,092 crores, which fueled the fall. However, domestic investors or DIIs were net buyers. They bought shares worth of 4,305 crores, limiting the bearish impact. So, for the week ahead, the market is likely to consolidate, and we have a broad range for the market next week, as the overhead resistance for Nifty is at 18,000 levels and support is at 17,100 levels.